welcome. This is Mary Ellen McGonigal with your Friday afternoon MEM Edge show. And of course, this is the show where we bring you where the action is in the broader markets. Quite a difficult period for the week. What we're going to do here is take a look at some of those headline news that drove price action lower last week. We'll also take a look at the broader markets, see where did we close. Are we in an area where we could potentially reverse? And also take a look beneath the market surface at those underlying sectors, defensive areas at the forefront this week. We'll also share where the weakness is really beginning to overflow into some of those industry groups. We'll look beneath the surface, take a look at those groups that are under more selling pressure than others and why. All about preparing you not only for next week, but for beyond. We have lots of other items we'll cover relative to earnings as well. So let's get started with those headline news last week. We did get some economic data that came in stronger than anticipated. And this is not good news simply because the Federal Reserve has made it clear that they want to see a slowdown in the economy and hence in inflation. So first up, earlier in the week, we did see new home sales surge to the highest level since February of 2022. And that was quite a surprise, certainly given the fact that mortgage rates are at a very high level. We also did get third quarter GDP numbers, and they jumped to 4.9%, fueled primarily by consumer spending. The consumers are still out in force. And that certainly is good news for the economy, but not great news for Fed policy potential, monetary policy going forward. We also did get core PCE data, and that is a very closely watched inflation gauge metric by the Federal Reserve. And that number came in at about 0.3%. It is remaining sticky and elevated. We also did see consumer spending rise by 4% in the third quarter. Again, that consumer out there front and center. And we also are next week due to get very critical employment data. That's been a real sticky point for the Federal Reserve. They want to see not only employment numbers potentially decline, but also the wage increases. That's been very painful by way of the Federal Reserve's comments. So we do want to get that down as well. From here, we will go ahead and take a look at those broader markets, and I'll share with you what's taking place. And here we are. This is a daily price chart of the S&P 500. We can take a look at that continued deterioration that took place last week. And the S&P is now trading below this key 200-day simple moving average. And take a look, we did get some high volume on this week's selling, indicating distribution. The momentum here, that shift that took place 2 weeks ago, is remaining in negative territory with this RSI trending downward. The only potential, I wouldn't even call it a positive, but we do have this RSI now down here in negative territory, indicating an oversold position. So we may see a bounce from here. However, overall, the tone and the trend is down. We can see stochastics down here below 50, trending lower, but this also is in an oversold position as well. From here, I do want to share with you a longer term chart of the S&P 500. And this is going to be really helpful as far as formulating and helping with a longer term view of the broader markets. This is a weekly chart of the S&P 500. And what I'm highlighting here is what a downtrend reversal looks like. And of course, I am sharing with you coming out of that bear market on the weekly chart. We did have the stochastics enter into positive territory in line with the broader markets trading above this 10-week or 50-day simple moving average. And then also this RSI trending upward and getting up above that net neutral. Now, we do also have an example of this downtrend reversal coming out of the 22 bear market. This is taking us back to the October 16th, which was marked as a low for the markets or a bottom. And take a look, we did get from here on that bottoming in mid-October. The stochastics, at the very least, were heading north. We had that black line up through the red. And then also we did have the RSI stabilizing, heading north. And the real true rally that shaped up in the markets was more in line with the beginning of this year. We saw an extensive broadening out of the markets, and then we had that move into positive RSI and stochastics. Now, the reason I'm pointing that out is we need to be aware of where the position of these metrics are currently, and we can see on the weekly, the stochastics are down here again in an oversold position below that 30 level, and then likewise we have this RSI in negative territory and trending lower. We did also, this is on the weekly, a 40-week or 200-day moving average. Again, high volume on last week's selling, indicating distribution, but really highlighting at this juncture that we are currently, and we do know things can change and shift very quickly, but as of the close today, we are in a negative facing position. So from here, let's go ahead and take a quick look at that Nasdaq, which has also broken key support, that 13,000 very widely watched level that we had been bouncing around for some time. We are decidedly now below that. High volume. Now, we did see the Nasdaq trend a little bit sideways and up almost 0.5% today, and that's good news. I'll share with you where that relative outperformance or strength came from, but noting here as well, we do have that RSI down here in that little bit oversold area. Certainly stochastics are, but net we are currently near term negative with the Nasdaq as well. So from here, as always, we want to really get a sense of what's shaping up beneath the surface using those 11 sectors in the S&P 500. And we are also adding an RSI indicator and then sorting these sectors in descending order. And I did mention to you that on the performance side, it was utilities, staples, and REITs that were up there at the forefront. We do still have technology up here, I would say languishing, because its relative underperformance by way of a move below these moving averages was a bit more recent compared to many of the other sectors. And we are keeping an eye on this level where it currently stands, as that is that near-term support for the technology. We'll get into some of those bigger names in this index, but it's still up there at the forefront, despite the fact that it did underperform for the week. Actually, it outperformed for the week, down 1.7%. And again, we'll take a look at some of those names that helped prop the technology sector so that it did not perform worse than the broader markets. Taking a look down here, we want to also be aware of these weaker areas, and energy was the worst performer, down 6% on the week. A lot of this having to do with earnings reports that are coming out from these major energy names, and the numbers are not good. So we can see the overall group experiencing weakness despite elevated oil prices. And at this point in time, this key 200-day simple moving average is this next area of support, but energy not looking particularly healthy. Other areas that continue to experience weakness, and surprisingly, healthcare, which normally is a defensive area of the markets, and you can see over the last 2 days, this particular group really fell out of bed. It had ended midweek above the broader markets, but we did end down almost 4% for the week. And again, earnings, that's what you're going to see as the big driver for these mega moves to the up or downside. It will be driven mostly by major components of those underlying sectors that are coming in this case, with weak numbers. So as we move forward, I do also want to share with you that REIT stocks were up at the forefront as well. And despite that, their rally day, certainly on Thursday and on Tuesday, the group overall remains in a very nicely confirmed downtrend. We can also take a look at utilities. If you were to look at the S&P 500, and the top performing name in the S&P is Nextera and EE, and this is looking a little bit more firm by way of moving above these shorter term moving averages. And then we have this nice MACD crossover. On the lookout for this MACD to move into positive territory. We have a brief move into it and a pullback. There were other names in the S&P 500 that were utility names that were top performers. And other areas that we want to also take a look at are staples, which had been seemingly on the move at the beginning stages of potentially reversing its downtrend. However, a pullback today has negated the advance that they made earlier in the week. But these are areas that you may, at some point in time, as they continue, we roll through earnings season and they continue to potentially move higher. NEE was earnings driven as far as their rally. This is and could be an area, certainly safe haven. So from here, let's go ahead and take a look at those underlying industry groups beyond those sectors. These are highly followed ETFs that I find very useful in keeping on top of what is or is not working, where the money flows are taking place. And again, RSI, 2-month daily price chart view. And let's take a look. Gold up here at the forefront and safe haven area of the markets. You can see the advance as it continues to trend higher, coming out of this oversold position, seemingly having further upside potential. And also we want to be on alert for this volatility index, of course, also known as the fear index. And unfortunately, we did end at 21. Certainly anything above 20 is a real gauge of the uncertainty and also fear among investors. And it's not a good backdrop for the broader markets. We need only go back to this March period when we were experiencing elevated, certainly heightened volatility, all about the banking crisis and other factors. And once we did see this volatility recede, of course, we also had interest rates declining. We were in turn rewarded with a nice rally in the broader markets. So let's go back and take a look at some of these other areas. Not a whole lot of movement on interest rates, but here we are with that yield on the 10-year, and it's up here at 4.8. Still remaining very elevated. And this is one area when you look at these interest rates, the fact that they are remaining elevated, it's been talked that the Federal Reserve feels that really investors are doing the hard lifting for the Fed in the sense that we are bidding these yields higher, and hence they have not as much of a need to raise interest rates, certainly not anticipated to be raised at their next meeting coming up next month. So moving along, taking a look at some of these other areas. We talked about technology. So we're going to look at some of the two of the heavier weighting areas here, and then beyond that, some of the names. But here we are with the Semiconductor Group, SOXX. Intel came out with good numbers today. They guided higher, but they were definitely in the minority. By and large, this group is continuing to experience weakness with companies and their management in these software names, talking about softness by way of demand from China and elsewhere, and the overall group remains in a confirmed downtrend. You're going to want to keep an eye on that, because when and if it does come back, let's take another quick look. But I did want to share with you, when this group gets moving, it can really produce some big winners. NVIDIA, and I know AMD was a mover back here. So keep your eye on this group. But at this point in time, near-term weakness remains. Software names, IGV is the ETF that I use for that. You can see the deterioration below the moving averages and your momentum shift into negative territory. However, at some point in time, we've seen this and experienced it several times this year. This is an area that is highly responsive to interest rates, but also earnings. And you can see these pullbacks into an uptrend, and very indicative for those of you, myself included, who are feeling that this has been a tough year. This is a prime example where you get this pullback. In this case, software names with the metrics on their momentum shifting into negative territory, and back they come. So what we are seeing here, however, is lower highs as we advance through the rest of this year. And that is not what you want to see to indicate strength going forward. Now, from here, I also wanted to share a group that can be very indicative of the economy, or certainly investor sentiment about that. And that is the Dow Jones in transportation average. When these transportation names, and that's going to be trucking, also rail, and also I'll share with you a view of UPS. When there's vibrancy in those areas, it's indicating that purchased goods need to be transported, and it is a good sign. Generally, we can go back to this nice rally. Of course, a lot of this was those airline stocks, and all of these transportation areas are really continuing to come under selling pressure, now in an oversold position, but not what you want to see if you want to put new money to work. From here, I do want to have us take a look at those mega cap names. And we'll also look at NVIDIA is incorporated here. That's great. So again, 2-month daily price chart view with that RSI. And then we have these charts in descending order as they are set up here. So first up is Netflix. Of course, they did come out with earnings the week before last. Here's that gap up. And it was struggling, but seemingly continuing to make progress above this downward trending 50-day. However, it lost that upside momentum later in the week, and you can see it's faltering. The good news is we are just at that 50-day simple moving average. Actually, we did dip below it, but we are not seeing heavy volume. It's not a name I would buy at this point, but it's certainly noteworthy, so that if we do have the markets enter into something more of an uptrend, it could be an interesting move. Here we are with Microsoft, and this is pretty indicative of what we're seeing here in the markets. They came out with very good numbers, and the stock gapped up into a base breakout in response. However, it was unable to retain that gap, so that the stock closed back into this pocket here with this back and fill formation that we had before they came out with earnings. It's very indicative of a difficult earnings season when a stock comes out with great numbers and is not rewarded, similar to this period back here. Microsoft came out, actually that was good news that propelled it into an uptrend. We do still have positive momentum with that RSI and MACD, so it's not entirely negative. Amazon came out with great numbers, and we can see here's that gap up that took place. However, not quite enough of a push to put these momentum indicators into positive territory, so not ready for prime time yet. Really, the broader markets are not supporting any move as it relates to many names. So moving along, Meta Platforms also came out with good numbers, but gapped down here, had a little bit of a rally today, but you can see how these big formerly leadership names are struggling to maintain any sense of an uptrend. NVIDIA here, we're looking at a daily price chart. You can see the move below the moving averages, the momentum shift into negative territory. So that near-term view looks as if we may easily see further near-term weakness. Apple due to report their earnings next week, but this was a pretty significant break below this 200-day simple moving average, which took place on very big volume. Now, what we've seen, you can look at Netflix as an example, those names that are really decelerated from prior highs. And if they come out with any kind of good news, they may be rewarded. However, you have to keep in mind what took place with Amazon, which was also rather depressed. And it did have that gap up. Now, a 7% gain on an otherwise difficult day is not certainly bad, but you can see that it gave up those gains and closed in the lower portion of its trading range for the day. Tesla, actually, we would be remiss to not look at Google or Alphabet. Really disappointed on the earnings side, and you can see this gap down and continued selling, very high volume here with the RSI and MACD in negative territory. I would take us back to this February period here. This was another weak earnings report for Alphabet. From peak to trough, it did lose 15% before experiencing or posting a nice double bottom formation and a move back above those moving averages with the momentum shift back into positive territory. Of course, that's what we would all certainly want to see, get these leadership names back to a leadership position so that we can be on the lookout for the markets to reverse and fare well. But from here, I do want to share with you other areas of the market as it relates to, I believe I did not include XRT as one of the charts when looking at the industry groups. Now, this by no means is this a constructive looking chart. I'm thinking, let me just see if the weekly highlights that. It was down certainly a little bit less than the markets. But what I did want to highlight from here are a couple of names that reported this week and are in this industry group. And it really is somewhat refined as far as those names that are faring better than other names after reporting strong earnings. This is Decker's Outdoor Corp. This was a big winner for my MEM Edge subscribers as we had added the stock to our buy list. It has a history of being a big winner. They have the OKTA sneakers, but also UGG as their products. And take a look, this gap up into a base breakout, super big volume, and a move into positive territory with that MACD. Another name that came out in this retail space with good numbers is Chipotle. Now, this stock also gapped up, but in negative fashion, it closed the week in negative, certainly relative to its high on the day. From here, we can just take a quick look at a 15-minute chart. And here we are on that initial gap up on their strong earnings, and then selling coming in for the last couple of hours, so that near term, it is certainly not constructive looking. Another area that we can take a look at as it relates to earnings, because we did talk about the move away from transportation, and UPS is often viewed as a gauge for activity relative to economic strength or weakness. And you can see this fall out here in response to weak earnings and a weak outlook. Now, when we talk about the economy, that would be outside of that consumer spending that is continuing to keep that GDP numbers elevated. Now, I also wanted to share with you some of the names that were the top performers in the S&P this week, and each of them, it was due to earnings, and that's not unusual during earnings season. But what is unusual is the companies that are faring better, that are being rewarded the most, are certainly in that defensive space. So here we are with American Tower. AMT is the ticker symbol, and you can see this sharp advance. And then today, a similar move, but certainly it was down on the day, but buyers came in on that dip. This is in the REIT space. We can also take a look at a name that reported the week before last, and that is Verizon gap up. Now, we do have this formidable opponent here at that 200-day simple moving average. But again, these really down and out names that are generally viewed as somewhat defensive, they do offer a nice yield, and that's where your outperformance. Verizon has a 7.9% yield, for instance, AMT 3.7. Let's take a look at some of these names in the Nasdaq that were up there at the forefront as it relates to outperformance. And not a great looking chart by any means, but we talked about utilities. This is AEP. They did come out with numbers. We can also take a look at one other name in that same space, and this is Xcel Energy. And you can see this nice uptrending formation here, despite a very difficult market elsewhere. And interestingly, it's to look at those top performers for the week, you will see it littered with these more defensive areas. Now, from here, you do want to also be aware of names and areas that are really under selling pressure. And this is, again, going to be all about earnings, because when you look at, and certainly an old school name like Whirlpool, but take a look at this steep decline and then a continued sell-off today. They did come out with weak numbers. We can also take a look at another consumer-facing name, Invisalign, a ALGN gap down and then flat on the day. But really what we are seeing is just a real move toward these names that are coming in with weak earnings. They are just getting punished. And that, again, is indicative of a period where investor sentiment is not going to really stand for that. They are going to just dump the name, unlike other periods where if earnings were weak, management is kind of not constructive. If we are in a bullish phase, oftentimes investors will look the other way. So here we are with DexCom, DXCM. This is a diabetes related company, and they came out with earnings, gapped up 10% on the day. Again, indicative of those names that are down and out, coming in with positive numbers. They are going to be generally more rewarded. Found resistance at that downward trending 50-day moving average. Another big name that came out this week, IBM, and we can see we had that gap up yesterday in response. Nice heavy volume, MACD crossover, black line up through the red. However, nothing in the way of follow through. Today, we are sitting here at that 50-day simple moving average. We will need to see more of a presence above that 50-day and a continuation of this bullish momentum. But of course, ideally, we will want to see the overall broader markets fare well. And I talked about technology. We did cover the heavyweight names. Certainly, Apple is up there. Microsoft we looked at, and NVIDIA. So I feel that we did cover that. And from here, I did get some great questions last week from our last week's show, and we're going to go ahead and cover a couple of ticker symbols here. First up, Rick was curious about ROST, highlighting a potential cup with handle formation. And I did want to take a look at this stock anyway, because it did hold in relatively well this week. Let's take a look at that cup with handle formation that Rick was on the lookout for. And unfortunately, selling pressures over the last 2 days really diminished greatly that possibility. We can see that the RSI now in negative territory. The stock has closed below each of these shorter term moving averages, and the MACD now in negative territory. So hence at this time, this cup with handle formation possibility has gone away. Also, Matthew had a question regarding TLT, and this is all about interest rates. This is the 20-year bond ETF, and we can see, despite this oversold position that was experienced earlier this month, that the overall trend remains down. Any rally attempts are being met with resistance at these downward trending moving averages. And if you want to know what to be on the lookout for to indicate that TLT could have more by way of legs, we will want to see it get back up above, at the very least, this 10 and 21 day simple moving average, get that RSI up into positive territory, and see more vibrancy in this MACD. At this time, the momentum is sort of trending upward, but not to an extent that we would be overly excited. And then last up, Stephen had a question about XBI. This is the biotech ETF, and we can take a quick look. Biotechs really fare well during periods of certainty and investor confidence in the markets, and true to form, the biotech space is just down and out. This is a riskier area of the markets, and we can see that this declining phase is very firmly in place, despite the fact that the RSI is in an oversold position. We're trending downward with that MACD. You will want to go back to this May into April period so that you'll know what to be on the lookout for to signal a downtrend reversal. It's going to be a move above these moving averages, get those momentum indicators certainly trending upward and ideally into positive territory. And that's it for this week. Everyone have a fantastic weekend. Please keep those questions coming. I certainly welcome them. As always, hit that like button if you like what you've seen. And I'll go ahead and look for you here again next Friday.